Hello, my name is Matthew Greenwood, and I'm the Acting Head of Debt here at the Centre for Social Justice. Today, we're releasing our new paper, Swimming with Sharks, that looks into illegal money lending in England today. Over the last year, we've been investigating illegal lending, and I'm here today to give you an overview of what we think occurs and what we think needs to change. So what have we used to base our findings on? We've gathered the largest sample of illegal lending victims to date through the Illegal Money Lending Team England. We've conducted interviews with victims of illegal money lending. We've read victim statements. We've looked into kind of a number of cases via desk research and prosecutions. And we've also gathered insights from small charities, credit unions, and other stakeholders across England. So when we look at the struggles the victims face, we find that they face multiple deprivations. About 75% of victims will be claiming some kind of benefit. They will usually owe money to a legal creditor, have a long-term health condition, and a low income. And it's also quite likely that a victim is unemployed and that they live in social housing. And I think what struck me about this research is the heightened vulnerability that victims face. They are vulnerable to exploitation, and when they do attempt to access legal credit, they are overwhelmingly denied. And that means that when a victim comes across an everyday expense or an income emergency that they have to tackle, unable to get legal credit, they will turn to a friend. We found that about 61% of victims said that they knew their lender before they borrowed, and about 56% said that they considered this person to be a friend. And what we know is that that friend will advance money and then they will reveal themselves to be a false friend, that they do not have the victim's best interests at heart and are actually lending them the money with the intention of making a substantial profit. Usually, a legal lender will not provide paperwork, they will not adhere to consumer rights, and a victim can find themselves being extorted. We know that this can often lead to a high cost of repayment, and it creates a cycle of dependency. We found, for instance, that about 60% of borrowers say that they have borrowed more than once, either because another cost comes up or because the cost of repayment means that a victim is actually borrowing to repay their previous loan and then borrowing again to cover the cost of everyday life. And a kind of common term, if you like, that comes up is the idea called a double bubble, where you pay back twice what you borrow. And we know that to enforce these loans, a lender will primarily employ kind of psychological manipulation. They will exploit their victim by finding out what makes them tick and utilizing that to its maximum effect. And this can be something as seemingly small, but actually quite big, by saying, wouldn't it be terrible if I told your partner that you'd borrowed money from me? And the shame of facing up to that, of admitting your difficult financial position, can mean that people continue to pay. But this can also extend into threats of violence, and in some cases, actual violence. So what do we need to do about this? The CSJ is proposing 24 recommendations under the umbrella of urgently renewing the fight against illegal money lending. And we think that takes three forms. We want to clamp down on illegal lending, protect the most vulnerable, and provide the alternative. To clamp down on illegal lending, we need to deter illegal lenders through proportionate sentencing, and that means increasing the sentence for the most heinous cases of illegal lending to achieve parity with some fraud offences. And we think that new sentencing guidelines should be issued to ensure that the response from the criminal justice system is proportionate to the crime that is committed. We also think we need to use the Online Harms Bill to ensure social media platforms are responsible for detecting and banning illegal lending from their platforms. We've seen a number of cases in which illegal lenders have operated online, either on messaging boards or on social media apps. We also think that we need to protect the most vulnerable, and that means bringing hidden debt to the surface. Currently, we don't talk about our financial lives, and we need to change that. We're proposing that the government launch a national advertising campaign to highlight the presence and dangers of loan sharks, as well as the support available from the illegal money lending team. We think we need to equip debt advisors with the tools to broach the issues. We heard from speaking to debt advisors that a number of people struggle to talk about illegal money lending with their clients. They might ask whether a client borrows from a friend or family, but they might not probe further. And we think that debt advisors need to be equipped with the right skills to be able to ask about this kind of crime. So we think that that is a matter of urgency. We also think that the Money and Pension Service should commit to protecting face-to-face debt advice for the most vulnerable, while using technological efficiency to drive the benefits of open banking and enable us to share more of our financial lives when we fall into trouble. We also think that we need to provide the alternative. As we've seen, victims who do seek legal credit are unable to get it. And that means we're in a difficult financial position, which is only going to get worse as a result of the cost of living crisis. We think that there are two primary things to do in response to this. We need to build financial resilience by promoting the Help to Save scheme, and we need to ensure that the no interest loan scheme that the Treasury is currently piloting enables people who use it to build up their financial resilience and not become dependent on financial support. We also think that we need to revolutionize credit unions. Credit unions are low-cost alternative finance institutions that are able to offer low-cost loans to people that need them, but currently they're just not big enough. We're proposing a raft of reforms to credit unions, which would see bigger, bolder credit unions, strategic mergers to ensure that they get bigger, and reduced capital requirements to ensure that a proportionate regulatory environment exists that promotes growth and gets credit unions moving. Those are our recommendations in this new paper, Swimming with Sharks, and I'm glad to share them with you.